Bitcoin, in the meanwhile, is trading at around 15-month lows right now.
So we estimate that Bitcoin actually can drop to 50,000.
The value of Bitcoin plummeted. At one point, it was selling for under $61,000, and that's now half of its all-time high.
Now, as we speak, Bitcoin is below $80,000. It has fallen, I think, 40% from its highs. What are the top 3 reasons for this fall, and how do you see the way forward?
A lot of the old-time holders, who are referred as whales, who had been holding the assets since about 10 years now, right, and gone through the peaks and troughs, they surprisingly sold more than what was expected to be.
Why would I, in my right mind, invest that 100 rupees in Bitcoin? I'd rather put that in stocks where there is so much safety. There is, decades of regulation, and at least you know that your principal will not suddenly get wiped out.
Bitcoin being a fairly nascent space, at the end of the day, Bitcoin is a 17-year-old asset. It's a teenager, and teenagers have mood swings, and so does Bitcoin and crypto. Right? So it behaves like one.
See, that's my problem, right?
In a world where money is being printed left, right, and center, you have to have a scarce source of value, which to our eyes, Bitcoin does really, really well.
Where are we at in terms of India's stance on crypto?
The finance minister has been very clear on this on multiple occasions, right? She's like, at the end of the day, it's a taxed but unregulated asset. That does not make it the only taxed but unregulated asset in the country. There are others as well. India's also been very clear is that by definition, this is a global borderless asset, and hence it needs global peers coming together to form the regulations for here.
Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, welcome to the Money Mindset. Today we are doing something different. We always talk about the stock markets, but today we are going to talk about the cryptocurrency universe. Now, this is a space that I don't understand at all, so I'm giving a disclaimer up front, but I do want to spend more time to understand the crypto universe purely because of the kind of, discourse, mileage that this entire space has gained globally. I have someone here who is going to give me a kind of not a lecture, but just kind of, educate me a little more so that I can be prepared for what is to come. And there's so much news flow that it sometimes gets hard to keep track. I have with me Shiv Pande, who is the Chief Business Officer of BitSave. Now, BitSave is a platform that they are building in order to help you invest in cryptocurrencies for the longer term through the SIP route. It's basically, systematic investing in cryptocurrencies. So it's very interesting to me. Shiv, thank you so much for finally being on the Money Mindset.
No, pleasure, Sonia. Pleasure that we could finally do this. Yes, absolutely. An absolute privilege here.
So as a disclaimer, once again, I want to say that I am a complete novice in cryptocurrencies. I have always tried to invest. Whenever I do, Bitcoin falls. And, whenever I back off, then there's a big rally. So at the onset, I want to say that, it's like crypto for dummies. That's what we're going to try and do today. Although I do understand the fundamentals of it. But if you had to start by just, telling me a little bit about the landscape right now, how would you describe it?
So I think the landscape, is fairly exciting, right? So Bitcoin and crypto both, I think have had a very interesting journey in the last 2 years or so. Jan 2024 is when US greenlit 11 ETFs to offer Bitcoin ETFs. I think that really changed the landscape a lot, right? For the first time, you didn't have to be a crypto bro to know how to invest in Bitcoin and other leading crypto assets. You could simply buy the ETF is what it is. And that really opened the floodgates, right? Because most importantly, amongst those ETFs was the giant of all, BlackRock, being there, right? So somebody who had earlier multiple number of times Larry Fink had mentioned that, Bitcoin is an index of money laundering, suddenly has come to the fore and said, Bitcoin is a legitimate financial asset. That fact that it's a lot like digital gold, right? So when you have the largest asset manager in the world coming and saying that I am batting for the asset, that really changed the landscape.
And Larry Fink was not in favor of Bitcoin for the longest time.
For the longest time. It's a very, very famous 2017 view of his that, it's an index for money laundering. And he came out on CNBC in December 2023 or November 2023 and said that, I've had the chance to look at it. I've studied it. My team has studied it. And I have to say that I was wrong. right? So when you have the largest asset manager in the world coming saying I was wrong, uh, I think that really changed the landscape. And for us also, I think that's the thing, right? Bitcoin is a journey, right? Invariably, it does not make sense to you initially because the world around you is sort of portrayed very differently. So that was, I think, a key moment. Second, of course, popularly so is the election of Donald Trump as a pro crypto and pro Bitcoin president, because I think what is most important out there is not just the fact that Trump as president, but his entire cabinet is a very proud holder of Bitcoin, right? Multiple people in his cabinet hold Bitcoin and bat for the asset. So it's not one person really saying it. It's a collective administration that really is batting for it, right? I think third, for that matter, is that public companies started buying Bitcoin as a treasury asset, right, led by MicroStrategy itself, which is now rechristened as Strategy. So more than 100 public companies today are buying or holding Bitcoin as a treasury reserve asset, led by, of course, by, as I said, Michael Saylor's Strategy, which holds more than 7 lakh Bitcoins today as part of their entire kitty. So I think these three things really changed the landscape. Having said that, Bitcoin being Bitcoin, it tanked for about roughly 40% from its all-time high.
See, that's my problem, right? I have trust issues with Bitcoin because of this reason. Whenever I track the rally and I'm like, okay, now I'm ready to invest in Bitcoin, there's a huge crash. And this crash is very different from what you see in the stock markets, for example, right? This huge volatility is what really makes an investor nervous. So now, as we speak, Bitcoin is below $80,000. It has fallen, I think, 40% from its highs. What are the top 3 reasons for this fall, and how do you see the way forward?
So top 3 reasons, very simple enough. Number one was extreme amounts of leverage that was built into the system come October 2024. Now, again, crypto or Bitcoin being a fairly nascent space, at the end of the day, Bitcoin is a 17-year-old asset. It's a teenager, right? And teenagers have mood swings, and so does Bitcoin and crypto, right? So it behaves like one, right? But having said that, one was the leverage. Now, fortunately or unfortunately, in crypto, you can go up to 50x, 100x leverage on a single trade, right? That what got really built in. That's number one. And that flash crash of 10 October really impacted the markets a lot. Number two is a lot of the old time holders who are referred as whales, who had been holding the assets since about 10 years now, right? And gone through the peaks and troughs. They surprisingly sold more than what was expected to be, right? So I think those are the top 2 reasons, if I may say so. Third reason is, of course, there's been, I mean, maybe for the largest part of from October till today, there's been a lot of macro uncertainty as well, right? What will the President Trump say? What will happen in tariffs? What's happening here and there? President's getting kidnapped overnight, right? So I think what happens is...
But just trying to play the devil's advocate here, when there is macro uncertainty, the narrative is that digital assets perform better, right? Because they are a hedge against fiat currencies. Yeah. But this time around, it was different. The markets fell, currencies weakened, and Bitcoin fell. So what was going on?
So yes and no, right? Yes and no. Number one, yes, that's the thesis. However, Sonia, the idea is that Bitcoin is yet a nascent asset. Only 7% of the world really has any exposure to this, right? So it's still seen as a risk-on asset. To a lot of us, when we study Bitcoin, it's a risk-off asset, right? Exactly for the reasons that you are saying. But what is also happening is, if you remember when the US government shut down last year, Bitcoin raced up, right? But also for the fact that because liquidity sort of drew up, sort of completely dried up, right? And hence Bitcoin has fallen back again. And that's the idea, right? So what we also noticed is that invariably in times of macro uncertainty, yes, Bitcoin should do well, but it takes a while to do well, right? The world in totality still races towards its own, good old safe haven assets such as gold for that matter. After a pause and once liquidity comes back is when we have seen Bitcoin really do well. A good case and example here being 2020.
So one of the reasons you said for the big fall in Bitcoin was whales liquidating, surprisingly, right? I mean, it's interesting. Why would people who have been holding Bitcoin for the last 10 years, whales, go ahead and suddenly liquidate? Is it because there was this narrative that, because of what's happening geopolitically, a big move towards gold and silver has happened at the cost of Bitcoin? Is that the right way to read it?
I'm not so sure. So I think what's happened is that these guys who've been liquidating whales, as they're called, right? I think they've been holding for the past 10 years. So they've basically made money like there's no tomorrow, at least in dollar terms, right? And these guys have seen sort of the worst sentiments in Bitcoin through and through. My feeling is that number one, they felt that the money was made. Number two, on a more technical basis, Bitcoin tends to go through this something that is called the 4-year cycle, where the third year is supposedly where Bitcoin goes down. That third year should have been 2026. The feeling is that they front ran that 4-year cycle. And hence they thought, rather than sell it next year, let's just front run the cycle when Bitcoin is at close to our all-time highs at 120 or 115. And that's the feeling that, a lot of the whales have liquidated because of that. They almost front ran Bitcoin's history.
So, if you want to understand, and see, all of this is really new to me, right? Because I don't understand the dynamics of how this works. If one wants to become a crypto bro in the next couple of years and you want to start small, take a little positions in crypto, how do you suggest one does it? What's the right way to do it without getting caught in this, whole liquidation game? And in India specifically, things are really hard because no one knows what the government stance is. I mean, are they just taxing it? Are they discouraging it? Are they at some point going to encourage it? Like, where are we at in terms of India's stance on crypto?
Right. So I'll answer both those questions. First, on India's stance on crypto. I, in fact, feel the government has a very clear stance on it, right? The fact that, and the finance minister has been very clear on this on multiple occasions, right? She's like, at the end of the day, it's a taxed but unregulated asset. That does not make it the only taxed but unregulated asset in the country. There are others as well in that fray. Having said that, what India's also been very clear is that by definition, this is a global borderless asset, and hence it needs global peers coming together to form the regulations for here, right? So in fact, during India's presidency at the G20, India was the one who took this initiative that the G20 and the IMF should come together and as a whole understand how to regulate or how to at least monitor and supervise crypto. That is yet a work in progress, right? So in fact, it was India who took the lead in that entire discussion. So that's one. Yes, it is taxed fairly heavily, if I may say so, as well. But I think if you're a long-term investor, Sonia, I don't think that's a discouraging move per se. Right, at the end of the day, there is a 1% TDS on every virtual digital asset transfer as per the government's laws, and there's a 30% gain.
Tax.
Capital gains tax. Right. So the way I look at it is yet equivalent to your FD, or for most of us at least. Right, and the 1% TDS, of course, you can set off, or
you can't say it's equivalent to an FD. Come on, FD has really, solid gains in the sense, at least stable gains, right? You
Fair.
know what to expect.
Fair.
With the crypto universe, is just like anything can happen. One day you wake up and it's fallen 30%.
Yeah.
That's where the trust deficit comes in, right?
Right.
How do you want to address that? Because, here is a market, like you said, only not even 10% of the world owns crypto currently.
Yeah.
And it's been in the system for almost 17, 18 years.
Yeah.
So why is that global adoption not picking up? Is it because of this trust deficit?
Again, to answer both of them, I think, which is why I think a good way to start, I would say, don't go on the crypto ride, because that can be a wild ride. That can be a wild and more often than not a disappointing ride. I would say use the volatility to have a Bitcoin SIP. Right. In the long run, you will reap the benefits of this volatility, right? I think gold and silver traders now are understanding the fact that volatility can be for their benefit as well, right? Or for that matter, if gold could go down by 30-35% today in India, we will say buy, right? But if Bitcoin goes down by 30%, people get scared. Right. Having said that, it does have a 17-year track record of going past all volatile moments.
But I think the reason for that is because, you can physically see gold, and gold is something that has been in our tradition for years. I'm not advocating physical gold at all. I still believe gold ETFs are the best way to do it. But as a traditional economy, people have been holding physical gold for years. So that asset exists. With Bitcoin, there is this whole lack of clarity about even there's no underlying asset. In that context, you've been explaining to me, we had this discussion earlier as well. For people who still question the fact that there is no underlying asset in Bitcoin, what would you want to say to them?
So very simply, money has no underlying asset, right? There is no underlying asset to your to anything that is being used in money for generations, right? Gold at the end of the day, Sonia, is a lumpy yellow metal, right? We just like, as you said, from a traditional point of view, right? The fact that it's been the asset of choice to store your value for 5,000 years, right? 90% of gold's value comes from it being a store of value. Only 10% comes from about industrial uses per se, right? That actually makes it good money, because if the demand increases, the supply can't seem to catch up that easily, right? Bitcoin is very, very similar. So in fact, I would say Bitcoin not having intrinsic value, which I completely agree, is a strength to that asset, right? So the idea...
Why would you say that?
Because if it doesn't have any intrinsic value, it's only doing two things: to store and to exchange value, and that's it. Right? There's no particular use of Bitcoin that you can do, right? Like money for that matter, right? Money does only two things. It's supposed to do only two things: store value and exchange value. And that's about it, right? Money is not used for anything else. Which is why I think, Sonia, we have to sort of also make a distinction that rather than treat Bitcoin as a stock, which it's not, it's almost like the digital coming of gold. Right? And I understand the fact that, gold is physical and you can touch it and feel it, but that also comes with its own complications, right? As exactly like you said, right? And maybe the best way to hold gold is a digital version of it, right? Gold ETFs, right? Anything that's physical, be it land, property, gold, silver, comes with its own complications, right? Where to hold it, where to store it, and so on and so forth. Bitcoin has none of those complications, right? It will not rust. It will have no problems of decay or being stolen, because if it's there on the blockchain, it's there on the blockchain for eternity, right? Number one. Number two, it also, it being digital, it being present on the blockchain on an open platform, which anybody can check at any given point of time. That's, in fact, makes it more transparent than absolutely any other asset on the planet. Number three is, let's say if you do have, let's say you're saying physical gold, like let's say if you have the bills, etc. for that, let's see if you are able to take it from the airport, right? Let's see if you're able to carry that. Bitcoin, on the other hand, in 10 minutes can go from one part of the world to another. In fact, I think we as Indians have a very interesting use case or case study from just last year, right? India got humongous amounts of gold back from the UK, right? After like a 7-month operation. If that was Bitcoin, Sonia, it would have taken the Indian government 10 minutes, right? So I would in fact argue it not being physical is its strength. It not having intrinsic value or a particular use outside the fact that it can store and exchange value is a strength and not a weakness.
So if a lot of people understand this, then why is the Indian government not regulating it? Why is there no regulator for cryptos? Because clearly the world is moving on, right? I mean, there's big money being made globally. And in India, of course, there's on one hand, there's overtaxation of crypto. On the other hand, there's no regulation. So adoption is becoming tough. Why do you think India is not taking that leap forward?
So fair. I think with India, I think we like to take our own sweet time with everything, right? If you pick up, Indian sort of Indian history, right? For that matter, we skip plastic money for most parts of it and went straight to UPI, right? And now we are the shining beacon on top of the hill when it comes to digital payments, right? I mean, and let's look at any industry, right? Be it defense, banking, insurance. We've taken our own sweet time to, really welcome something that we feel is coming from abroad in this sense, right? I think the same thing is happening with Bitcoin and crypto as well, right? That we want to understand in its entirety what this can do, both the pros and cons. I think to be fair to the regulator also, Sonia, I also feel that India has to regulate something for 140 crore people plus. Right? It's not like we are a small island kingdom that can regulate for a small set of people. Here you have diversity of and income ranges that are absolutely ginormously widespread, right? So the regulator also has to, and I'm sure that that's their position as well, is that they feel that if they sign a dotted line, they're allowing one set of rules for 140 crore people, so they have to take their time with it. Right. And that's fair to them. Right. I think what also is happening is that while you're seeing the globe make money out of this, while you're seeing multiple countries now adopt this as a sovereign asset, you also hear of hacks and scams and people losing money and etc. etc. And at the end, this is also the same country that is now discouraging FNO from a speculation point of view as well, right? So anything that they feel can make your average retailer lose money, I think the government, rightfully so, has the power to take a step back and say, you know what, let's just experiment for a while at a small set and then see how this is playing out. And that's been India's history, right? We take our own sweet time, which is okay.
Which is okay. I mean, I take your point that when it comes to scams or when it comes to preventing the youth from, losing a lot of money, we've seen it with the STT hike in FNO, etc., right? But in that context, if I am someone who wants to invest my money, and here is an asset where there are large scams happening globally, large scams happening locally as well, and there is huge amount of taxation and there is no regulator, why would I in my right mind invest that 100 rupees in a Bitcoin? I'd rather put that in stocks where there is so much safety, there is, decades of regulation, and at least you know that your principal will not suddenly get wiped out.
Yeah, I think that's a fair point, right? I think that's a fair point. But I think two things, right? I think any financial innovation, right, I think precedes regulation. Right, that's number one. Number two, I think this is where a lot of the education with respect to Bitcoin and crypto is so very important, right? That here is a scarce and finite asset that you can actually hold for eternity in a world where money is being printed left, right, and center. You have to have a scarce source of value, which to our eyes, Bitcoin does really, really well. So I think number one is the fact that yes, you have to be careful with whom you invest. I think, but more than that, you have to be educated on the asset itself and then maybe choose a platform or a route where you feel that, okay, you know what? Okay, if I follow 1, 2, 3, 4, 5 steps, then I can invest in Bitcoin in a safe and simple manner while it is currently not a regulated a market.
Okay, fair enough. Okay, coming back to the here and the now, we'll first try and, complete that, and then we'll get to how one should go about it, right? Very interesting things are happening in the US. As you said, Trump is pro Bitcoin. Then you have, there is a new Fed chairman as well, Kevin Walsh, and he has made statements pro Bitcoin as well. He called Bitcoin the new digital gold. But of course, he's been flip-flopping on his view as well. But now where are we at in terms of US's position and the world position on Bitcoin, on cryptocurrency, and how do you see things move from here?
No, I think the digital gold narrative is really taking hold, right? And that's because of the voices that are sort of behind it, right? So White House, when it established a strategic Bitcoin reserve, has put it as digital gold. That was the most interesting thing. So, and you have countries such as the UAE, the UK, Ukraine, in fact, Bhutan, who've been holding Bitcoin as a sovereign asset, right? So this number is only growing. That's number one, right? The number of companies who are sort of waking up to this, that they can hold this asset in a fairly safe way as a liquid store of value, right, has also been growing. I think the regulation part also, Sonia, is expanding, right? So you have the US, which passed the Genius Act last year, which is more on the stablecoin piece. Now they're trying to move ahead with the Clarity Act, which is on the crypto market structure. You have the UK, which is very, very clear that next year or this year is when they want to have a crypto market regulation as well, right? You already have countries such as the UAE and Singapore, and in fact Hong Kong as well, which are fabulous crypto jurisdictions, right? So in terms of the narrative of digital gold, I think that is really catching up and holding on. You have more and more countries saying that, you know what, we want to be good crypto markets. But also more importantly is that you have now central banks buying Bitcoin and crypto, right? So last year, the Czech National Bank, they made a test transaction of $1 million of Bitcoin and crypto. You have the Luxembourg Sovereign Fund, which has allocated one part of its portfolio into Bitcoin as well, right? So you have all of these narratives that are really building up very, very well. And the way I see it is because Bitcoin is a scarce and finite asset, it's almost like a race to the top, right? I think this is like the new race that is happening. So the landscape is sort of building up very, very well out here.
So at such a time, we are seeing a crash in Bitcoin, right? So do you think there are any immediate triggers that could take Bitcoin back to, say, 90,000 or more than that? Or do you think it could be in this range for a while?
So I think the trigger, what we feel has to come out from the US right now, because clearly that country is batting for it the most. I think if the Crypto Market Structure Act passes, which has been a little stuck, there is a bit of a tussle between the banks and crypto companies out there. But if that passes, that's your trigger. We do feel that this time can be utilized to accumulate at these levels for the next, let's say, at least 2-3 months or so. We feel that this will take a while. But having said that, I think the long-term story stands intact, right? So one thing that I missed saying is that you have a very interesting report from Deutsche Bank last year, which says that they envisage central banks holding Bitcoin and gold together by 2030. Right. So I think the immediate trigger has to come from the US. That's at least how I look at it and how we look at it as a firm as well. But the landscape seems absolutely solid.
Okay, landscape seems solid. You almost sold me on crypto, I am someone who is such an equity market bro, so-called, but now I'm obviously opening up to learning about digital assets and learning about, because the world is changing so fast, right? But your background has also been very different. You just started building a BitSave in 2023. Before that, what were you doing?
So before that, I was in fact with a crypto algo fund for a while. But most of my working career has been in traditional markets. I was leading Dara Shaw's Northern Division for Investment Management and Advisory. I joined as a trainee, went out as VP and as the regional head. So yeah, built. In fact,
so how did you move from traditional markets to crypto? Must have been a big change for you.
It was a huge shift, because I had been ignoring Bitcoin throughout those years, and I so wish I had not. But being a student of finance teaches you not to invest in something that you don't understand. So I took my while. But Sonia, I think what changed is that I was a good husband and listened to my wife, right? I think because she's an economist, and during COVID, she comes to me and says, why don't you look at this asset, right? Seems to be doing something very interesting. And I said, I don't understand it here. If you want to, you go ahead, you put your money in. She's like, no, you are the finance guy. I'm an economist. I'm like, cool, okay. But
what was her thinking behind it?
So it was simply price action, but also a couple of her friends are very good lawyers in the blockchain space. Right, so she was she was looking at what they are doing and what the price action is doing, sort of putting it two and two together. But I did what all good husbands should do: they should listen to their wives. So
that's the model of the story.
That's the model of the story, right? And what I also did is that I took up a very small course on Udemy. By a former Goldman Sachs trader turned crypto educationist during those 2 free hours in the morning that we all had in COVID, right before markets open. And that really changed my thinking. And I was like, wow, I said, this will completely change the way we look at things, right? And that was my shifting point.
So what was it in that program that really convinced you to move to crypto?
So number one is the gentleman really explained Bitcoin and crypto as simply as possible, right? I mean, to explain blockchain, he would put up a chain and put wooden blocks on it and say, this is blockchain. Now, if you put money on it, it becomes crypto. If you put medical record on it, it becomes medical records. You put land records on it, it becomes land records for that matter, right? But I think the key puzzle was always is that, in 2020, when governments had to print money, right, to provide support to the markets, right, I think that is where the thesis of Bitcoin started making a lot of sense to me, right? That governments have a mandate to expand credit. As a result of which, if we don't invest in scarce assets, money will lose value. Now, you can pick and choose which asset appeals to you the best, right? Could be gold, could be silver, could be a great stock for that matter. But Bitcoin is not only scarce, but also finite. Right? There cannot be more than 21 million Bitcoins.
On that, I think we've had this discussion before, right? At some point, what if the powers that be decide that, okay, Bitcoin is not finite anymore and, there's more Bitcoin on the blockchain. How does that work? I know it's sounding like a very, very, basic question, but I've always had that on my mind.
So, very simply put, See, let's say if you hold 10 Bitcoins and you've been an early person who's been in the Bitcoin space, right? It is in your vested interest to keep the supply to 21 million only, right? So if, and the way the Bitcoin network works is that, let's say if I am a newbie, I can put up a proposal saying that, the supply should be expanded. But the entire early adopters who have been there and who want their value of Bitcoin, of their value in the network to be only, let's say, 10 divided by 21 million, it is in their vested interest to never allow the expansion to happen, right? So I think that's the part, right? Because the way Bitcoin supply can only go up is if the community as a whole together says that, yes, let's expand supply of Bitcoin, right? We don't see that happening, right? Because it's the vested interest of all holders not to expand the supply, right? I think that's where we feel that it will be 21 million and not more than that.
But who decided that amount?
So it's not decided, frankly. The way Bitcoin works is every 10 minutes, a certain X number of Bitcoins are mined, right? And that number is slashed in half every 4 years. It's part of the rules of the game in itself, right? So in 2009, every 10 minutes, 50 Bitcoins would be mined, right? And that became 25. And then 12.25 and 6.125. Currently it's 3.125. At the end of this 4-year cycle that I was mentioning, right, will come another what is called the Bitcoin halving. So it will become from 3.125 to 1.75, 2.36 and so on and so forth. So in fact, Sonia, if we now sort of just calculated, roughly 20 million of the 21 million Bitcoins have been mined already. But because of this decreasing pace, the last 1 million will be mined by 2140 or in the next 124 years, right? So it's going to become more and more and more scarce asset, right? While credit in the world only expands, right? So you have declining supply, increasing demand as we discussed the landscape, and right, and an asset that is in fact just shrinking in supply, right? So
But what if the rules of the game change? We've seen that happen. I mean, in the last 1 year, everything that you didn't expect has happened, right? Geopolitically and for gold, for silver. I mean, a silver has not performed for 10 years and then suddenly silver is up like 200%. So what if the rules of the game change?
So the rules of the game have to only change in terms of if everybody comes together and says that we need to change the rules of the game, right? Bitcoin has no CEO. It doesn't have any central authority that, one fine day the board meets and says, let's expand it, right? I think that is the defensibility of Bitcoin, right? In fact, gold and silver rising, right? We don't see that as negative. We see that as a tremendous positive, right? That, finally these scarce assets, right? Silver obviously not as scarce as gold, but finally these scarce assets are noticing the fact, or are being noticed on the fact that once you have money being printed left, right, and center, or the dollar weakening for that matter, right? That money, as we know, it is losing value, right? You need to park your money in a scarce asset, right? I think that's the thing. So gold going up, I think is not in measure in terms of things happening that we never imagined. I think it's a culmination of things that were happening from a long point of time, and suddenly that thesis is playing out really well.
So gold and silver going up doesn't come at the cost of Bitcoin. You're saying that both Bitcoin and gold and silver are scarce assets. So when it goes up in tandem.
Correct, right? The timing can have some delay. But we've repeatedly seen this, right? That as and when the world realizes that, money is losing value, they rush to what we call as safe havens, or what we call as scarce assets, right? So this has happened repeatedly. So that now happening in the last, let's say, 4 months, 5 months, we see that as a tremendous yes. It's almost like a euphoric moment for us, right? And we feel it's just a matter of time to when that euphoria shifts to the digital part of the globe, right? And that is where Bitcoin catches on. And this has happened repeatedly, by the way. So in 2020, when liquidity was flushed in owing to COVID, gold went up first, right? Bitcoin did nothing for about 6 months. And then Bitcoin went up 6 times.
So you're expecting Bitcoin to go up significantly in 2026?
Yes, I think this will be a good year. I think we'll have a great end to the year.
Is that your confirmation bias?
It's not a confirmation bias. Maybe I won't say it's a confirmation bias, but I'm just reading history as it is. Right? Can there be some inherent bias? Maybe. Maybe, right? I think when you attach to an asset or to anything for that matter in life, you can have certain amount of bias. I won't say from that angle, but just being a student of history and finance, right, and money supply, I feel that yes, I think we'll have a great end to the 2026.
So if someone wants to start now, right, what's the best way to do it? Someone in their 30s, 40s who have never been exposed to this asset because of the volatility, what is your recommendation?
So we feel that there are 2-3 ways you can buy, right? Of course, the easiest way to buy that is exchanges, but exchanges can have security problems as well, as we have seen. Although exchanges, I think, do some parts absolutely fabulously, right? In terms of creating liquidity, exchanges have done a tremendous job. But how you store the asset, it becomes very, very crucial, right? I think that's what, Sonia, we have tried to do. We have tried to make almost like a fund structure out of it, right? Where in BitSave, you don't have to create a wallet. You don't have to know too much about the crypto universe, so as to say, because what we give is just one diversified large cap crypto index, one crypto and gold hybrid, and one just Bitcoin. And all of this is kept within institutional custody, which means that once the buying activity for the day closes at the cutoff, right? And once you are assigned an NAV, right, akin to any other index product, the asset's keys are taken away to the custodian, just like how the assets are from mutual fund are taken away to the depository, right? And in our case, the keys to those assets are kept in an offline and distributed manner. Till date, at least, this system has not been hacked, right? With that disclaimer of till date. But it's also of how all Bitcoin ETFs in the US also store their assets, right? Which is why I think we tend to hear a lot of, people losing money or exchanges having liquidity issues or having security problems. But we've not heard this sort of problem happening in, let's say, Bitcoin ETF, right? Because once the cutoff is achieved, the assets keys are taken away in offline custody. So we feel, not because it's ours, but we feel that BitSave is designed in a manner that is very familiar to Indians who've really learned how to invest in mutual funds and index funds. And we give you a very similar experience with the same safety practices as followed by Bitcoin ETFs in the US.
Okay, this was very, very helpful, Shiv. And I must say that from somebody who's come from an equity background, I do struggle with Bitcoin and cryptocurrencies. I do have a complete trust issue, but this conversation was very, very helpful. Thank you so much for being here and being a part of this conversation. And by the way, you are the first guest on my show who's talking about an asset class apart from equities. So I'm so glad that we had this conversation.
Pleasure and privilege, Sonia. I feel that, these conversations only expand, first of many, hopefully. And this asset is here to stay, right? I think this asset is here to stay.
Okay, many more conversations with you lined up for sure.
Yeah, absolutely.
Okay, thank you guys for watching and have a great day.